Good morning to everyone, and thanks for joining us for today's call. Where we review the Q4 performance as well as the full fiscal year end 2025 performance for Tecnoglass. On the first slide, the highlights for the year record revenues for Q4 in 2025. We were able to grow about 10.5% for the year despite all of the challenges from a macro perspective, with both segments contributing nicely. Commercial construction grew at a double digit pace, and single family residential at a high single digit pace. In line with what we've been discussing in the past few quarters, single family residential is being driven by geographical expansion, by our entrance into the vinyl market, which should provide a lot more upside in 2026, as we'll discuss when we talk about guidance. And on the commercial side, essentially, we continue to execute on our growing backlog, which again hit a record level at 1.3 billion at the end of 2025. We also expanded our showroom footprint, opening up more showrooms, which now are located in 6 different states. We have Florida, South Carolina, New York, Houston, Phoenix, and we'll enter into the California market with a showroom in LA. Cash flow continues to be strong. We generated 135 million of cash flow from operations, which, as we'll discuss, allowed us to return 145 million of cash to shareholders via buyback and dividends. EBITDA for the year reached 291 million, maintaining our industry-leading margins of almost 30%. Moving on to the second slide, our backlog record grew up to 1.3 billion, which is up 16% year over year, and mainly supported, as we also discussed in previous calls, by high-end large projects, which we believe to be less sensitive to interest rate and some of the other challenges from a macro perspective. Given the fact that the backlog is now more composed of these type of projects, we have visibility farther out into 2027, given that these type of projects typically get executed over 24 months and not over 18 months on a combined basis when you have more of the smaller projects. As a reminder here, no single family residential revenues are baked into the backlog, given the fact that those are more spot in nature. So, in addition of strong visibility on the commercial side, again, taking us through 2027, we have the upside on the single family residential side, which includes obviously the expansion into different markets and the vinyl segment. As a segue into single family residential expansion, I mentioned that we already have showrooms in many different states, and the intent would be to continue expanding our footprint as we continue to develop new products for different geographies. Vinyl continues to ramp up, and we expect that to be a significantly larger tailwind of earnings next year, or 2026 versus 2025. And we also introduced a lighter aluminum line for the West Coast and the Midwest and the Northeast called the Legacy Aluminum line, which we are seeing good reception on. Dealership expansion continued to be strong, over 20% year over year in terms of the amount of dealers that we're now doing business with. And that aligns perfectly with the geographical expansion and the vinyl expansion that I just mentioned here. Despite challenges in overall market backdrop and expected taper growth at low single digits in our main key markets, Tecnoglass is expected to outperform and take market share. So if you look at this slide that kind of showcases general industry dynamics, despite a more challenging year as expected in 2026, we are confident that we'll be able to grow double digits again, as we discussed in our guidance later on. From a revenue trend perspective, during Q4, the company grew low single digits versus challenging comps, given that in 2024 we had the benefit of the sales tax waiver. So some of the orders that were placed ahead of the sales tax waiver expiration got executed in Q4. So the single family residential comps were tougher. And essentially that segment ended up flattish, but we were able to grow our commercial side nicely. And again, we're able to hit a record revenue quarter in Q4 versus Q4 of last year. For the full year, again, we were able to achieve 10.5% growth against an industry that probably grew more in line with low single digits. So obviously, we continue to take market share there. From an EBITDA perspective, the trends, are somewhat different here because there are several moving pieces that played a part not only in Q4 but for the full year. Most of you have already obviously heard these calls, and we have discussed the impact on the company's profitability in terms of tariffs and aluminum costs and FX mainly. Um, and we were able to address a lot of those issues. We were able to mitigate some of those impacts with pricing actions, with redeploying supply chains, with establishing a larger presence in the U.S. manufacturing wise, with the acquisition of Continental early in the year. But all in all, a very, I would say, strong year in terms of profit as well, given all of the challenges that the industry had, with aluminum, for instance, going up 17% year over year, with a stronger currency in excess of 10% stronger year over year. So with that in mind, achieving 291 million, which equates to about an 8% growth in EBITDA year over year, we feel confident that we'll be able to tackle some of these challenges going forward, as we'll also discuss on the guidance following up. From a cash flow generation, we had another really strong year of cash flow generation, with operating cash flow at about 135 million for the year. This cash flow allowed us to reinvest in CapEx. It allowed us to return about 145 million worth of cash to shareholders via dividend payments, about 28 million, and buybacks of 117 million for the year, which equates to more or less 5% of shares outstanding. And as we mentioned during our call here, the board has approved an expansion of the buyback program to do another 100 million, which currently leaves us 110 million of available capacity to continue buying back shares as we seem appropriate. The company continues to be in a very good shape from a balance sheet perspective, very clean balance sheet, 0.24 times levered, and we expect to continue generating free cash flow as we move forward into 2026. So we continue to expect to have a lot of financial flexibility to execute our strategy moving on. Finally, on the guidance end, we put two different views together, two scenarios. Our high end scenario allowed us to grow 12% from a top line perspective, against, again, what you saw earlier, an industry that is expected to grow 1 to 3%. So we expect to continue to be able to take a significant amount of market share. And with that, we expect to be able to grow EBITDA year over year, or about 8%. There are different variables that will play a part as to whether we're able to achieve this scenario or the low end scenario, where we're only growing about 8% top line. Mainly what happens with input costs in terms of aluminum costs, what happens with pricing action. We're not baking in any type of pricing action next year, but if we're able to take more pricing given the higher input costs, we'll go ahead and do that. Overall demand trends as it relates to interest rates, sentiment, and macro dynamics, and foreign exchange rate. So we'll see as we progress through the year. We'll give you more updates, but we feel confident that either way we'll be able, to grow top line close to double-digit rate. Thank you for joining us, and we hope to see you when we report our Q1 2006 results.